Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. What do we got going on in the markets today? We're kind of having a flat day. I mean, the Dow down about 15, NASDAQ down about 10. It's kind of flat across the board. Now, this is the last trading day of July, right? And we've been up 5 straight months in a row. Up, 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 up. Now, to me, this bullish momentum is kind of getting exhausted. It's getting to the stage where it's running out of energy, and I think we're going to get a pullback. But you can find any statistic you want on the stock market. Every year that has had 5 straight months up in the stock market, if you take the position right now, we just closed out 5 straight months up, so we're at the end of July. We're basically going to be at August 1st tomorrow. From now till the end of the year, it always finishes higher than we are right now. Every time. Now, could this be the first year that it doesn't? I think we're definitely going to get a pullback here. Now, if they push it up to new record highs by the end of the year, I suppose that's possible. But I do think the market's going to come in a little bit. That's just my take. Your take may be completely different. Your take may be that we're going to continue to run up. And there's a good argument for that. There's a lot of this FOMO in the marketplace. A lot of people have this fear of missing out. A lot of the hedge fund managers, they're worried about losing their job. They haven't been in this market. They haven't caught this bull run. They got a lot of FOMO going right now that could push the market a little bit higher. My take still is that the market's going to come in. We'll see how that all plays out. All right, let's get over to the real estate market. Now, what was the headlines? What was the headline? Here was the headline. All right. Home builders churn out smaller homes to attract first-time suckers. I mean, first-time buyers. Well, anyways, that's a little joke. Anyways, they got this shrinkflation going on. They're shrinking the size of the homes. So the homes are shrinking a little bit, but I don't think the prices are shrinking much. The homes, they drop down by 56 square feet, right? So they're calling these starter homes. Okay, so the first-time buyer is going to buy these starter homes. Now, these starter homes are over 2,000 square feet. Now, why do home builders not build the typical starter home, what I knew as a starter home, the little track home, 2-bedroom, 3-bathroom, about 1,200 to 1,500 square feet. Now, that's what I always was taught was a starter home. But now the starter homes start over 2,000 square feet. The home builders don't build the smaller homes because of permits. They can't get, they can get the permits to do them, but after they pay the cost of the permits, pay all the government regulations, they can't make money at that. They have to build 2,000 plus square feet as a starter home, and they have to build these McMansions to make their profit. Now, you'll notice that home builders, very fascinating to me right now. Actually, I'm starting to look at shorting the home building stocks. Now, you'll notice that companies like Lennar and Toll Brothers, they've gone up 100% from this time where they were last year at this time. Now, this time at the end of July, Toll Brothers was trading around $40 a share, but it's now $80 a share, right? 100% up. Last year at this time, Lennar Homes was trading $65. Now it's trading $130. Once again, 100% up. So the home builders have made this big up move 100% higher. But here's the thing. They've done it on lower pricing. Year over year, home prices for new homes are down 15% year over year. So they brought the price down, but they're doing a lot of volume. And of course, this reason for this is because the typical people do not put their home for sale. They don't put their home for sale because they're locked in, 2.8%. They don't want to sell their home. They're going to die in that home. They may be in that starter home, but that starter home has become their forever home. So what are the homes that are available for sale right now? Well, they're the new homes. The home builders are building these new homes. But the home builders' stocks are also getting exhausted. They're running out of energy. They've come down just a tad. They're sitting right on the 20-day moving average. Now, I'm not short them yet. I'm waiting for it to break below the 20-day moving average, but I do think this is going to be an opportunity to short the home builders. This is just my take. But the home builders are doing the same thing the cereal manufacturers are. Now, I like cereal, and when I go buy a box of cereal, the price goes up and the size goes down. Matter of fact, one of my cereal, they like pour it into little bags now, and they sell it by the ounce. I mean, it's like gold. They treat cereal like gold. But the homes, they're shrinking the size, but they're not shrinking the price. So you're getting a little bit of this shrinkflation going on in the new home market. Now, that's just what's going on there, and that's how they're playing it. They're shrinking the size a little bit, keeping the price up, and their profits of these home builders are at record highs. Now, what I want to talk a little bit about is, well, a lot of you know that I think the home values will come down by 50%. We're down about 10% in most areas, so about 40% farther down from here, just going down to hit the long-term average, hit the mean, if you will, and we may overshoot that to the downside. A lot of people think that's just crazy talk. Mike, how can you say such things? You're trying to scare the people. I'm not trying to scare anybody. That's just my take. My take is that the home prices will come down by 40% lower than we are right now. And I do think that we're going to get some panic selling. Now, this could become a systemic problem, and I want to talk a little bit about the credit crunch going on. Well, let's talk about the banking system in general. Banks are still continuing to fail. Now, once again, this is funny to me. Okay, so the FDIC, they try to cover this up. They try to, when they go shutter a bank, when they go close it, the regulators come in, they always do it on a Friday. Friday is the day to go in and shutter the doors of the bank, to take over the bank. The regulators come and take it over. Okay, so this weekend on Friday, Heartland Bank, regulators came in, closed them down, right? So another bank went down. But Mike, Heartland Bank is nothing. It's a small little bank in the middle of Kansas, only had $139 million in deposits, only had 4 branches. This is nothing. And you're correct, it's nothing. The FDIC has money to bail it out, right? And they bailed it out. It's going to cost them $54 million. $54 million to bail out $139 million in deposits. Now, to me, that's a lot. That's about what? About 40%, let's call it. Okay, so now what you don't understand is all banks are doing this. Now, they gave the assets to the bank, the Heartland Bank. The assets were taken over by Dream First Bank, another bank in Kansas. So now this is what Janet Yellen, she kind of calls this a merger, right? And she says there's going to be more mergers. In other words, we're going to wipe out the FDIC, all their money, and the taxpayers are going to have to pay for all these bank mergers. $139 million costing the FDIC $54 million to shutter the bank, to close it down and give it to Dream First to run. Okay, so these banks, they're falling over one after another. Now, you didn't hear about Heartland Bank because, well, no billionaires were in there. There's not a lot of billionaires that live in Kansas, so none of the billionaires were doing their banking, so you really didn't hear about this bank going down. But this bank went down, and banks are continuing to go down. Look, there's about 19 trillion, let's call it, in bank deposits across the United States, about 19 trillion. And these banks took the 19 trillion, they went and they, made these loans they made them to the residential loans, the commercial loans. Oh, commercial loans are just getting slammed. It's just they're down well over 50% in the commercial loans. And they do multifamily loans and they do business loans. But all of these loans were made when the Fed had rates at 0%. Now the Fed raised rates up up to 5.5% now. And so these loans have lost 30, 40, 50% of their value, depending on where they are. If you're in commercial, you lost about 50% of your value. Probably lost more than that if you're in commercial. But my point is, of this 19 trillion, the banking system only has, let's call it maybe 12 trillion left. They've already lost $7 trillion of your money, of my money. They don't have our money there anymore. So they're desperate to get money back into the bank because they've lost all this money already, and they're having to run on the banks, right? Every week, more and more money is taken out of these banks. Most of the regional banks are having bank runs still. So they're in a lot of trouble. They're trying to raise money. They'll even offer you 5, maybe 5.25% to bring you more money so they can go and make some more loans and lose that too. But here's the thing. We're getting this credit crunch now because what are the banks doing? They're not making loans. So even if you're willing to pay the 7.25%, 7.5%, 8% in some cases for a real estate residential loan, for a refi, they're turning you down. They're turning down people. 1 out of every 5 people that apply for a refinance right now are getting turned away. There's a credit crunch going on. Even if you're willing to pay the higher interest rates, they're saying no. They're saying we don't want to make loans right now. Well, the reason is because they're getting all this money sucked out of their bank, known as bank runs. They don't have the money to put out in the form of loans. And the money they put out in the form of loans has to be much higher because they're paying 5.5% to get new money in. So when they make a loan, it's got to be at 8, maybe 10%. And I do think that mortgages are going to be above 9% by the end of this year. I believe that 8, 9% range. We're at 7.25%, let's call it right now. And I think we'll hit 8.25% if you have an 800 credit score. And I think you'll be up over 9 if you don't have an 800 credit score. And that's just going to be by the end of the year. This is just my prediction. I have no proof that that's going to happen, but that's what I think is going to happen. I think that you're going to see mortgage rates continue to go up, and this is going to create pressure on the housing market. It's going to create this pressure, and people are going to be forced to sell their house because you see there's a lag effect. People talk a lot about the lag effect, but most people don't know what it is or why there is a lag effect. See, the Fed's been raising the rates, right? But it hasn't had the effect yet. It hasn't taken hold of the economy yet and hasn't brought inflation down yet, hasn't sent the stock market down. Actually, it sends the stock market higher. Look at the stock market. Look at the stock market. It's going up, going up. Okay, stock market's going up. Probably going to hit a record high maybe by the end of the year, maybe by the end of this week. It's not that far away from a record high. But what the lag effect is the fact that there's businesses out there that have loans, right? And they got these loans down when rates were at 0%. And now these loans are coming due, but they're not coming due at a quick enough pace. Some have already come due, but they have to refinance these loans at a higher pace. And as they refinance them at the higher pace, that's going to bring down corporate profits. It's going to create a lot more layoffs. A lot of people are going to be laid off. This is the lag effect. It takes time. Everybody wants to see the real estate crash tomorrow. Tomorrow morning at 8 o'clock, let's do the real estate crash. Doesn't work like that. Takes time. So we get this lag effect from the Fed raising the rates. It takes time to play out. And it's going to play out, mark my words. You wait till the end of the year. If you want to buy a house, you'll get a much better opportunity than right now. Everybody's all excited. They're all excited because we had the spring selling season. The prices went up a little bit. Went up during spring selling season. You know, it did that in 2007. Went up during spring selling season. 2008 went up during the spring selling season. What did it do when the spring selling season was over? Whoa, it started to drop pretty quick, didn't it? Yeah, it's going to drop pretty quick again. Once again, this is just my take. Your take may be completely different. We have a lot of moon boys in the comments. A lot of moon boys think the stock market's going to go to record highs Bitcoin's going to go to $1 million. Houses are going to double from here. I love the Moon Boys, but I just don't agree with them. I would like the Moon Boys to be right. Let's keep the party going. I mean, it's been a good run. These are the good times. These are the good times. People still have money. Not everybody, but the wealthy people have a lot of money. The poor people, they have nothing. They're getting killed by the inflation, killed by the higher interest rates, killed by the loss of jobs. They're going to be losing jobs. They're going to be losing a lot of jobs. Are going to be lost. Anyways, once again, just my take. It's Monday. The week's just getting started. Don't want to depress anyone too much on a Monday. So get out there, everybody. Have a great Monday. But first, give me the thumbs up. Why not? Why not? It's Monday. And hit the subscribe button because there's going to be excitement this week. We got a lot of earnings coming out. We got Apple. We got Amazon. It's going to be market movers. And my take is the market's going to come in. 5 straight up months. I think the 6th month will not be an up month. That's just my take. The month of August, I say it'll be a down month. We'll see how that all plays out. Get out there, everybody. Enjoy your Monday. Bye-bye now.